Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Goldterra.
Welcome back to Kitco's coverage of the Bank of Montreal Global Metals and Mining Conference taking place in Hollywood, Florida. And I am pleased to now be joined by Randy Smallwood. Randy, of course, is the President and Chief Executive Officer of Wheaton Precious Metals and the Chairman of the World Gold Council. Randy, great to have you back with us.
Michelle, always a pleasure. Thank you.
Always a pleasure, but not such pleasurable times. And I have to start, Randy, with a big macro picture here. And that, of course, is the Russia-Ukraine conflict. Eastern Europe in a situation of war. Of course, it's a tremendous humanitarian disaster and tragedy, but it's also very volatile from a market perspective, a global economic perspective, giant geopolitical risk here. And yet we don't see gold responding as aggressively as one would think it should.
Yeah, I kind of half wonder if the world has forgotten what war is. And some of the footage that's coming out of the Ukraine, it's devastating. I mean, it's tragic in terms of what's happening. And but you know, the discussion, the broader base, I have been surprised at the lack of response on the gold space. Normally, something like this coming on, when you hear comments about, you know, nuclear switches being dusted off.
Right.
I can't remember the last time we've ever had anything like this. And yet it's almost like the world has forgotten what war is.
A little bit complacent, I would agree, because if we look at how the scenario plays out, and I'm going to ask you to put on your sort of political military analyst hat here, if you will, how do you see the situation de-escalating? Because the conflict hasn't gone as Putin expected, certainly with the resistance that Ukraine is putting forward. There are talks happening. So far, they haven't yielded much. The European powers and the U.S. really putting the squeeze on Russia's economy. Do you see a scenario where Putin goes, listen, my bad, and packs his stuff out of Ukraine with his tail tucked between his legs? I mean, can this de-escalate for Putin?
There's a lot of ego involved. So that's all I can leave it at that, right? There's a lot of ego that's involved in the decisions that are going to come down. And so the challenge is finding a graceful way for the conflict to come to a standstill. And I just don't think that you can start something like this and then back away from it. So it's unfortunate, but hope it gets resolved. Or we can all hope that some of these discussions actually bear fruit, but at the same time, the attacks are still continuing. So we remain to see what will happen.
And to your point, ego, that to me is the major concern here. I don't foresee a scenario. Look, I don't know. I too am prognosticating here, but I don't foresee a scenario where Putin withdraws, where he pulls out of Ukraine and it's sort of back to where we were.
Yeah, I agree with you. It's unfortunate, but I think it's past that point where he could somehow step back. Now, no doubt, pressure coming on all fronts. Happy to see some movement on the SWIFT, but when you sit and look at the amount of just the gas that's required into Europe, the costs that would be required cutting that off. It's, there are other measures that can be taken, and hopefully, as I said, they come to some type of negotiation. But it is just surprising how comfortable the rest of the world seems at what's happened to date. To me, it could dramatically escalate into something much worse. So fingers crossed that it doesn't.
Right. Well, even if it does successfully de-escalate from a military perspective, it's likely to anticipate that the sanctions or some kind of punitive measures are going to remain on Russia. What does that mean for the precious metals market?
Precious metals, gold, represents a store of value. It has forever. And so we just see continued strength in precious metals. We see higher inflation rates, all of these costs associated, especially even with all the sanctions that are going up against Russia, but even in a broader base, we see costs climbing everywhere. It's all going to have an impact on inflation. And inflation can be simplified as your dollar just doesn't go as far, your euro just doesn't go as far. It's being devalued relative to hard assets. And gold is the most liquid, most readily solid. It's the hardest asset out there. It's the best asset out there. So it all bodes well for gold. We've been in a long, over 20-year upward trend in gold prices, and we continue to see that trend moving forward. Incidents like the pandemic and like the global financial crisis back in 2010, like the Russian invasion of the Ukraine, they'll give us bumps and stuff like that. But the strong support, it's been an upward trend for over 20 years. Gold continues to gain strength relative to all of the fiat currencies in this world. And so we're going to see that trend continue.
Well, let's discuss gold with regards to the Fed and inflation, because we're in a situation where we have this tremendous geopolitical risk, but we've also got inflation at a 4-decade high, which, as you've pointed out before, puts the Fed in a really difficult position, and even more so now with this Russian dynamic. What are your expectations for the Fed raising rates in the upcoming meeting? The thinking was initially that it would be a 50 basis point hike, but that now seems to be looking more like a 25 basis point hike, if that. What are your thoughts there?
Again, it's applying Band-Aids, and they're just running out of Band-Aids. They're having less and less capacity on that front in terms of being able to put Band-Aids to hold things together. It's getting tougher and tougher to maintain stability. And so I just, you can't, inflation is going to come from, when you look at the raw commodities that feed into everything that we consume as a society, we see increases in cost and in price all the way through that. So that's just going to continue moving forward. So inflation is something that we're going to have to deal with and work our way around. And I would call it a very fine, high wire balancing act in terms of what the Fed's actually doing right now. And we'll see how successful they are.
So given this and the Fed's inability to really control inflation, what is your outlook for gold over the next 6 months or so?
Up.
Up.
Up. I mean, again.
Do you have a price target for me?
Well, for 6 months, unfortunately, what we have is a whole bunch of different issues that can give it all sorts of short-term volatility. But here's what we see as a continually higher basement in terms of gold prices as time goes on, right? And so we now look at 1,700 as being a good firm basement, or 1,800 as a good firm basement, and maybe it's 1,900 now. We this trend has been going on for over 20 years now, and we don't see any reason why it's going to continue. In fact, what's driving it has continued, and probably, I would say, even more strengthened it. The fiscal balance sheets of so many countries around the world is even weaker than it was 20 years ago. And so it's just going to continue adding that.
Do you have a new
pressure.
bottom for gold then in this environment?
Oh, I would say it's $1,800 to $1,900 in that range. We've seen it come off the pandemic bump that we've had over the last couple of years, kind of hit 1,700 as a low and bounced off of that, but bounced up pretty quickly again. So we're comfortable that we're not going to see too much below this.
All right. I'm going to ask you, before we focus on Wheaton, we're going to focus on your role as chairman of the World Gold Council. And you were telling me that you had your first in-person meeting in 2 years yesterday. So what was the outcome of that meeting?
Well, and like a lot of people down here at the BMO conference, it's the first time we've seen each other face to face in a long time, especially at a conference of this size and scale. There was the Denver Gold Show back in September was relatively well attended, but still, this is the first one that's had such open. So yeah, it was good to actually sit down face to face and meet people, as it has been on so many fronts. And a good, productive meeting at the World Gold Council yesterday.
And you said that the goal was to bring gold into the 21st century.
Well, we've got an initiative that we kicked off about 1.5 years ago, or a little bit over a year ago, called Gold 247, 24 hours a day, 7 days a week. And the overlying mission statement there is to bring gold into the 21st century. And so it's a multi-pronged approach where we're trying to increase accessibility, fungibility, trustworthiness to gold, to make it more readily accessible to the broader population. And so there's no doubt that with changes that we've seen in terms of digitizing the economies and currencies around the world, that there's space for gold to improve and to move into that space. And so there's a concerted effort at the World Gold Council, along with other members in the gold industry, to try and improve the accessibility of gold and the trustworthiness of gold and the fungibility and just making sure that it's there to present the stable foundation that it always has to the monetary system.
On the fungibility aspect, does that mean that the World Gold Council is moving strongly in support of tokenized gold, combining some kind of gold and the blockchain, a gold-backed token, if you will, from the World Gold Council?
If it is, it'll be a stable coin. It will never be a cryptocurrency. I think the last few weeks, if not few months here, have really highlighted the differences between a cryptocurrency and a stable coin. And so there's no doubt that there's space for gold to back the stable coins. And in fact, I would argue that it's probably the best stable coin out there is to have something in gold, because then you're not reliant on the fiat currency that backs so many of the stable coins today. And so there's definitely an opportunity for us to move into that space.
All right, well, you mentioned the Denver Gold Forum when last we chatted in person. And back then, you told me that the metal that you were most excited about was not gold,
Silver.
but silver.
Yes.
Do you still hold that view?
Yeah, the fundamentals haven't changed behind silver, right? Silver hasn't performed as well as I would have hoped over that period of time, but it's still doing relatively well. But silver just has so many more attributes behind it in terms of what it's used for. And more than half of silver now gets consumed in high efficiency applications, especially in today's world when we're talking about improving efficiencies and cutting down on waste. And so silver will play a role in terms of moving energy around, whether it's solar panels in terms of improving their performance, whether it's mobile electronics in terms of making batteries last longer, or and therefore less batteries required. Silver is always going to play a role in that. So yes, still bullish on silver.
Still very bullish on silver, or the most bullish on silver?
I mean, I like silver. I like gold. They're both, when I look around the world right now, I mean, I hate to say it, the political situation probably does bring some more appeal back into the gold space, but silver looks pretty good.
Well, look, Wheaton is diversified in silver, gold, platinum, palladium, and cobalt.
Yeah, a little bit of cobalt.
So break down the case for us. Which of these have the strongest fundamentals at the moment?
Well, silver does have the strongest fundamentals just because so much of it is consumed in the industrial side, and yet it still acts as a precious metal, a store of value. But the gold market is so much larger. And so the fact that we have all these opportunities in that gold space to grow our company, we changed the name originally from Silver Wheaton to Wheaton Precious Metals, because there's no doubt that as our company grows, we're going to wind up with more and more gold in our portfolio. And so gold is probably what I'm most excited about from a Wheaton perspective. We do have a lot of silver in our portfolio already. We're about 45 to 50% silver and about 45 to 50%, in that range for gold. And so a little bit of platinum, a little bit of palladium, and a little bit of cobalt, but equally weighted kind of on the gold and silver side.
Let's talk a little bit about silver and how it hasn't responded as a safe haven in this geopolitical environment. Why not?
Well, silver definitely has higher beta, higher volatility than gold does. It always has. It always lags gold, but then outperforms gold on the way up. Unfortunately, it also outperforms gold on the way down. We've seen that for hundreds of years in terms of how silver gets valued. High beta investors, if there's a precious metal that's probably lost some of those high beta investors to the crypto space, it's probably silver. Silver's probably suffered a bit more from losing investors, definitely, than gold. Gold is very stable. It's it's the volatility of the crypto space that kind of more correlates to what you see in the silver space, and so you just don't see that much on gold. So I say silver's probably suffered a bit more on that front. But again, I do think that we as an industry have to make improvements in terms of accessibility of both silver and gold and precious metals as a whole. Some of the moves we're making at the World Gold Council will definitely help move down that path.
Well, it's interesting because a lot of the argument has been that gold hasn't rallied because much of the money has gone into digital gold, being Bitcoin, but you're saying that much of it has actually gone into silver.
Well, I think digital gold, calling Bitcoin digital gold is a bit of a misnomer by far.
You're saying that the move has come away from silver more so than away from gold.
It's just silver is a higher volatility metal. And so for investors that like high beta, high volatility, they're more apt to come from the silver side if they're moving away. So I don't think there's been any, very little impact on the gold side. Gold is, and it's really shown over the last couple of weeks as being quite different than cryptocurrencies.
Well, can't group all cryptocurrencies together, but it has, to many people, sort of challenged the argument that Bitcoin is a short-term safe haven asset and a hedge against inflation because it hasn't rallied really on these developments. In fact, Bitcoin is down quite significantly year to date. But
Right.
I want to focus back on your area of expertise, which is platinum and palladium. I know that you guys have a big position in that as well. How does the Russian crisis impact that? Can we see a rally in the platinum and palladium market, given that Russia is the top producer of palladium in the world?
There's no doubt. Now, I will say that the application of platinum and palladium, most of it is tied up in catalysts in terms of environmental control and pollution controls and stuff like that. And they are interchangeable, although there's efficiencies. Platinum tends to work better with diesel-driven engines, whereas palladium is more efficient with gas engines. And that's one of the reasons that palladium has outperformed lately, is we've seen a shift away from diesel to gas. So you start taking palladium away from the market, palladium prices will climb, and we have seen that. There's no doubt the bulk of palladium does come from Russia. The bulk of platinum actually doesn't come from Russia. It comes from South Africa. At Wheaton, we're quite fortunate to have two investments, one in palladium with the Stillwater mine in Montana, and then last year we just announced with Generation Mining their project in Ontario, where we actually get some platinum from that project, and it's a palladium project. So there are other sources out there. The Marathon project is still obviously a couple of years away from production, but there are other ways to get exposure. There's no doubt that short term we're going to see some really strong prices in palladium as there's issues with that Russian supply. If it gets too strong, you'll see some replacement into the platinum space to offset that. And so the world as a whole can still manage that, even though so much palladium does come from Russia. If for some reason that does get cut off in terms of supply, we'll find a way to survive. It is the strongest human instinct. We're pretty good at surviving.
Not to sound cynical, Randy, but I'm going to sound cynical. What is the best positioning now with this Russian-Ukraine crisis in terms of the metals market? Which commodity stands to benefit the most here?
Gold. As a store of value in times like this, when I hear about nuclear triggers being dusted off, it's been decades since there's been any talk like that. And so, again, I go back to the fact that it astounds me that we haven't seen a bit more concern about that on a worldwide basis. And so, and given the characters at play, I think gold stands to benefit, as a required store of value. That combined with the inflationary risks that we see around the world, and it's not risks, we're seeing the hard results. That combined, I just think there's really good, strong strength in having gold as part of your portfolio.
But you don't see other metals as having a higher percentage in terms of room to rally in the next 6 months?
Yeah, I mean, I hate to say it. I don't generally, in my career, I've always done much better focusing on longer term, just because there's so many events that can happen on a short-term basis that you have no control over. And so I do tend to focus on the longer term. So 6 months, I don't make investments based on 6 months out. I make investments based on where do we see long-term trends going, and knowing that you'll eventually normalize to that depending on what happens in the shorter term. But
that does seem to be a very common sentiment at this conference. Mark Bristow shares that sentiment.
Yes.
Play the long game.
Yeah, play the long game. Well, and we're in the business of, that's what we are in this business. When it comes to the capital that we put into mining projects, you're there for the life of mine. You have to move that forward. So we've always looked at things from a life of mine perspective.
Well, let's look at how you've been putting capital at play with Wheaton, because you guys have expanded. You've acquired a number of new assets. Break that down for us.
It's been a busy 2021. In fact, the last 15 months, we've committed $1.4 billion worth of investments into new projects coming on stream. And so very, very active, 8 different streams on 7 different assets. One of them is already producing, but the rest of them are all development projects that'll be constructed over the next 2 to 4 years. Construction's already underway on a lot of them and moving forward. So really excited about what that's going to deliver for us. Altogether, that combined with our already strong organic package of assets, or portfolio of assets right now, we'll see 20% growth. And so we see a path to being well over 900,000 ounces of gold equivalent production within the next 5 years. Our guidance for this year is about 730,000 ounces. So that's a good 20% growth profile over the next 4 or 5 years. And with a bit of good fortune, I think we can get up over 1 million gold equivalent ounces, which is sort of a personal objective of mine, to get Wheaton up to that level.
Well, I am sure next time we chat, you will probably have reached that objective knowing you. Randy, thank you so much. As always, really appreciate it.
Always appreciate it. Thank you, Michelle.
Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra,